Hi, Jeff here again from GCD Property, and welcome to another edition of Top Tips Tuesday. So these are all about giving property owners and investors tips on how to really maximise the return on your next property purchase. So this week's tip is for those looking to acquire finance to purchase their next property. So it's titled Finding the Best Financing Options for Your Next Property Purchase. So number one, get your personal finances in order. So get all your statements, get your credit card down, get everything in order. If you've got outstanding tax returns, get they all done, because the banks, when you submit an application now, they go into a huge amount of detail, really changed over the last few years. So having all outstanding debts paid off, making sure your credit file is in good condition, get a report if you're not sure. A lot of those services offer a free report. Make sure everything's ready to go and you have your regular savings account building in value, and you've had your existing properties valued, so you know the exact value. So when you go to your finance specialist, you've got everything ready to go, and they can give you a more accurate picture in terms of your options once they have all that data and information. Number two is pay off any small loans if possible. So we're seeing it's not always the size of the loan that affects your borrowing capacity, but it's the weekly or monthly repayment. One big stumbling block I see for those looking to purchase the next property is car loans. So they're generally not a huge amount, but they're quite a high monthly amount, and it can really reduce your borrowing capacity. So you may be able to refinance, or you may be able to pay those smaller debts off, and that gets rid of your outgoings, which will help increase your borrowing capacity. Number three is ask the broker or your lending specialist for some solutions. So whether you're going direct to the bank, so ask your lending specialist what would they suggest. Because the banking industry is a very wide, broad range, banks have lots of different policies. Policies are continuously changing. So a loan structure that might have worked 3 or 4 years ago for your last purchase might not work now. And the banks are very competitive. They are always looking at the opposition, what they're doing, and trying to better their products. So having a broker or a lending specialist that understands the market and can give you solutions for that specific property that you're looking to purchase is very important. Number four, compare principal and interest versus interest only. There's really no set rule for one or the other. Generally speaking, if you're looking to buy your own home, you would obviously want it on principal and interest to pay that debt off. If it's an investment property, it really depends on your structure and whether you're getting started with property investment. So for example, if you're a young person just getting started on the property journey or property ladder, whether it's your own home or your first investment property, it's not too concerning about paying the home off as quick as possible, and having an interest only loan might work because it may give you higher borrowing capacity. So if your goal is to buy another property in the next few years, you might be better off with the lower repayments that will give you that ability. If you're at the other side of the journey and you're getting closer to retirement, you might be better off definitely paying principal and interest to get rid of that debt if you're not looking to acquire more property. And just remember, you can change the loan structure from P&I to interest only as well. If it's a loan for an investment property, I would always recommend that you do the cash flow both ways. Also, the banks will offer different interest rates. So in the past myself, I've looked at interest only versus P&I. I've had both on both types of owner-occupier properties and my own investments as well. So sometimes the banks will offer you a bigger discount for P&I versus interest only. Sometimes it'll be quite close. So again, that's why vitally important to have a great lending specialist that understands all the different products and pros and cons of each loan offer. And number five, always look at refinancing your existing properties. So if you're going for the next property purchase, always ask your lending specialist, if I bought those other loans over to that bank, one bank, what could the bank do? So generally, the more borrowing you've got with one lender, the bigger the discount they'll give you. So no set rule which is one or the other, but always a good idea just to ask, and then you can make your decision on the most detailed information that you have available. So look at that existing loan structure and see if the banks will offer you a better rate for bringing the properties over, and is that in your advantage or disadvantage. So that's helped with your finance option. Finance is a big part of the property purchase, and it's really important to get it right. So thanks for watching, and see you again next Tuesday.